Hello everyone. I hope my sound is working. I do have a high wind advisory happening in the area. My aerial internet connection, you know, the line that goes from the pole to my house, that thing's shaking pretty badly. I mean, we've got nasty high winds. So if I do drop for any reason, that's the reason why. And I do apologize, and we'll try and get it, you know, try and get it made up here, whatever that takes. If it ends up being tomorrow, because I have a dropped internet connection. Hopefully that won't happen, and this will all go according to plan. And yeah. Good. Got a sound check. Everything good? Good morning. Good morning, Cripson and Steve and Coffee Talk and CS7. Excellent. Oh, I know who excellent is. What's up, my man? Good to see you here. There's going to be a bit of review for at least two of you here, but that's fine. Today we're going to talk about the role of business intelligence. We're going to talk about the tool that I use, which is the tool that I built, and we're trying to turn it into a product. I want to repeat that I'm not trying to sell you on a product. I'm trying to show you a technique. I'm trying to show you how I incorporate business intelligence into my planning, and how I use planning to create automated strategies which make me money. Now, you can do this technique using any product on the market. Please don't think that I'm trying to make you use my product. I'm trying to show you a technique. If a driver wants to show you a technique in a car, he has to pick a car to show you the technique in. Wants to get the car up on two wheels and drive it around on two wheels on its side. Well, if you're focused on what car it is, you're looking at the wrong thing when he's doing this trick. You need to focus on the actions of the driver, not on the product itself. And understand that what I'm trying to show you is a way that I make money, and that you too can make money this way. And if you take the technique and you apply it without the product that I'm showing you, more power to you. I will help you. I will help you write your tools. I will help you do anything you want. And if you want to use this product, that will soon be an option. And hopefully the price is right on that for you. And if it's not, then we can negotiate. There's always options available. And like I said, if you want to put in the time to make your own tool and you want my help making it, I will sit there and help you write your code. Because that's just what kind of guy I am. I'm your sensei. I'm your teacher. I will teach you anything that you want to know. Anything that you ask me. Anything that you want to discuss, we can talk about. Today I want to show you how I actually make money and the technique that I use to actually make money. Because I feel that's a fairly fitting opening to the Mindset Monday that we're going to do today. Just reaching out to Casey there. Casey's here. Excellent. There you are, people. People were asking about you, buddy. He's just busy. He's got a lot of stuff on his plate, man. Guy's a hard worker. All right, let's get started, everyone. Hello. Oh, it was terrible. Ugh, let me start over. Hello, and welcome to the dojo. I am Sensei Kevlar. Welcome to another Mindset Monday, our last one together in the boiler room. You all have been such an amazing class, and I have been so privileged to have you as my students. In today's Mindset Monday, we're going to talk about the role of business intelligence with regards to long-term planning. You see, if you can't see what it is that the market is doing, and what your portfolio is doing with regards to the market, then you can't make intelligent decisions about what the market will do next. If you were making informed, intelligent decisions about this market, you probably would have guessed that it would have paused right here when it came on back down to right here, and it did. If you were making informed, intelligent decisions, you probably would have guessed this would have been another low, and it was. What happened next? Could we have Fibonacci extension Fibonacci projectioned that? I'm betting we could have. I'm betting this is some retracement of one of these. Whatever it is, we needed to know that. Whatever it is, we needed to have a view of where the market is going and what it's doing. We also needed to have our understanding of where our position is in the market. The point of paper trading that I have been trying to get you to do is to get you familiar with the motions of the market, get you familiar with the layout of your portfolio, get you to understand the relationship of your allocation to your distribution, your allocation on this opportunity, your allocation with regards to the price, your allocation with regards to where your bottom is, your allocation with regards to where the absolute bottom is, your distribution with regards to your schedule, your allocation with regards to your schedule, layering on 2D, 3D, 4D strategies. Knowing where this market will go next, it's impossible, but knowing where it could go next is everything. Knowing that it could come down to here and stop and turn around, knowing that it could come down to here and stop and turn around and make you money, knowing that it could come down to here and stop and turn around and make you money because you came back here. That's market intelligence. That's knowing what the market will do. And when you spend enough time staring at these charts, when you spend enough time looking at what's happening, when you spend enough time reading the news, when you spend enough time looking at BTC USD, and you know that recently it's gone up and up and up and up, well, you can wake up the next day and be assured that it's come down and down and down. Without even opening trading view, you can know in the back of your mind that the news has been Bitcoin's way too high. We're looking for a retracement here. Here it comes on down. Sure enough, is this a good opportunity to start your allocation schedule for what you were in distribution at close to 1,200 for? Absolutely it is. Especially right down here at $10,500. Again, this is market intelligence. Everything that I have been talking about has been a combination of market intelligence, what the market is doing, and business intelligence. What is my position at? Where is it with regards to this? The blind swordsman trains with a blindfold on, so that he can hear the sound of the sword coming and know to block with his own. Be the blind swordsman who trains with a blindfold on, so that when you open your eyes and you really look at the market, make your plans without these. Then come back and see if those plans were any good with them. Make your plans turning without the chart. Know what the Bitcoin range is because you've studied it enough, and go and make the plan in Excel without looking at the chart. Can you do it? Is such a thing possible? Am I just talking out my butt right now? Well, if you know that the recent, in the past that Bitcoin's come down as far as $5,000, and recently it's gone up as high as $12,000. If you know that the speculation is $25,000, and that's what you're targeting, all the way up here, and you want to trade a range between $5,000 and $25,000, can you do it without looking at the chart? Can you make a plan for where you would be in the market using those two numbers alone? Would that plan be valid if you traded it? Would it make you money? If you just said, well, if it comes down here, I'm going to buy, and if it goes up there, I'm going to sell? Yeah, it would. You can trade it on paper. You can trade it without a chart. You can just make up numbers and see that it works. It all works. What's required is the discipline to actually doing it. Because I'll tell you what actually happens is the traders, they get in here with their money, and they get in here and they start doing this, and they think that they understand what's going to happen next, and then it goes like this. They think it's going to, they think it's going to do this, and then they think it's going to come down. And then it does this, and they're freaked out. Well, did you plan for this? You should have. Should have planned for a lot higher than that, probably. Should have planned for a lot lower than that, probably. Whatever your plan is, that mindset will keep you in the market forever. Staying disciplined to the plan means not only having a plan that works, but actually hitting the button. And not just hitting the button, but actually selling your Bitcoin. I'll tell you, it's scary selling your Bitcoin because it looks like it's never going to come back down. Selling your Bitcoin up here, it looks like it's never going to come back down. How could you possibly sell something that's just going to keep going up when it's just going up? And then what happens? Well, it comes back down. Could have been buying back down here. Well, yeah, you could sit here and do all of this, right? You could sit here and manage this in Excel. You can sit here and manage all of this. That's what I've taught you how to do. How to make yourself profitable on paper. What I'm going to show you today is how to automate that business intelligence. Automate the intelligence of where you are in the market. And then automate the execution of selling that Bitcoin when the price goes up, even though it's scary. And then automate that execution of buying the Bitcoin when the price goes down. And just having this go for days and weeks and months and not having to worry about it. Today I'm going to show you a product that I have spent 2 years working on. And hopefully what you will take away from this experience is that you need business intelligence in your life. Now, if you end up using my product to get your business intelligence, if you end up using this product to get your market intelligence, that's not what I'm trying to sell you on. What I'm trying to sell you on is this idea that you need business intelligence. This idea that incorporating business intelligence into your planning is a critical aspect of any good plan. Let's begin. I have here my portfolio, and I'm just going to pause everything for just 1 second so that we can talk a little bit about what's happening here. I have here a Discord channel that is dedicated to my portfolio. In my channel, I have my portfolio commands. So when I execute commands, I'm the only one who can see it, and then what I can do is I can invite my friends into my room. I can say, hey guys, come do this with me. I can say, hey, come check this out and help me plan this trade and trade this plan. And they can in turn watch what it is that I'm doing and see what the settings that I'm using and then copy those settings themselves and do those things with me. Or they can deviate from my plan and make their own plan. And it all happens here in Discord. It all starts when I go, I've heard about this new thing, salt. And salt has recently had a lot of volatility. I think that's fantastic. I think this is a great market to be, working within. And what I'm seeing right now is I'm seeing an opportunity where this market has gone up and up and up, and then down and down and down, and then up and up and up, and down and down and down, and now it's gone up and up and up. Well, I'm betting it can do one of three things. It can go down and down and down, sideways, or up. Either way, I want to take advantage of what happens next in this market. So the first thing that I'm going to do is I'm going to come here and I'm going to look at my salt ETH. I'm going to say, give me market intelligence on salt ETH. And what that'll tell me is the current highest bid and the current lowest ask and the last price. It'll also tell me the 24-hour high and the 24-hour low. This is a critical piece of information right here. Because what it's saying here is the 24-hour high and the 24-hour low is as follows. It's from 113 to 155. 113 to 155, which is a 37% increase. You can see that right there. That's the 24-hour range. The 24-hour ATR is 37%. This thing is shooting up like mad, right? That's a critical piece of business intelligence. I'm sorry, market intelligence right there. That wasn't terribly obvious if you weren't looking at it. Just by pulling it up and doing a little bit of business intelligence right here, I now know more about what this is doing. Now I'm going to apply my technical indicators. What I'm showing here is that we are probably overbought, but the trend hasn't shifted yet. So I want to make sure that I can take proper advantage of this opportunity. Let's do a Fibonacci retracement. Let's do an extension, right? We'll come down to here, we'll bring it up to here. Sorry, did that completely wrong. Let's do the retracement on this right here. So I want to do it in reverse. So I want to see this 618 in reverse here. There we go. Okay, here's the 1.618. Here's a nice, you know, psychological high right here. Here's the 0.02 mark right there. Probably a nice psychological high right there to plan for. What about our low? Well, I imagine that first of all, we could hit this low right here. I also imagine that there's a low down here at, you know, our zero line, effectively. This puts us in a nice, beautiful range on this. There's a nice trading range that we could make a lot of money if we were moving within this range of this market right here. Let's say that the market continued to go up and up and up. Well, I'd want to have about 30% of my position to be selling out right here. Well, let's say that this market went down and down and down and down. Well, I want to have about 70% of my position available for buying all through here. All through this opportunity right here. Okay. So the next thing I'm going to do is I'm going to take a look at my allocation. Maybe I already own some coins. Maybe I already own some salt. Again, let's come over here and we'll take a look at if we did any buying of salt. And we did. We have a whole bunch of buys of salt. We've been doing some buying of salt as recently as December 1st. And we paid 0099, and we were buying all the way down to 82, right? All the way down to 81 here. So we've got a good range of salt buying in order to give us, you know, how much we paid for our salt, right? Now, that tells us effectively what it is that we've paid for our salt. We were in this range right here when we bought our salt. This is where salt is now. Okay, do we have any salt? Let's take a look at our wallet. This is going to take a little bit because I have a large wallet on Bittrex and it takes a little bit for it to compute the whole thing. But what I want to look at is I want to look at the amount of salt that I have with relationship to my portfolio. This is another key piece of business intelligence. Being able to say that my allocation of salt is X% allows me to say, you know, what happens when salt goes away. So it's you know, it's organized here alphabetically. Here's my salt, and you can see that I have 339 salt. This is how much salt I have. 339 salt at current market price is about 0.19 Bitcoin worth of salt. It's also about 4.7 Ether worth of salt. It's also about $2,131 worth of salt. This is some critical market intelligence right here, because it's telling me what my allocation of salt is relative to the markets that I might trade it in. If I know that I have $2,000 worth of salt, how much US dollars do I have to trade? If I'm trading it in Ether, I have 4.7 Ether worth of salt. How much Ether do I have? I have 98 Ether. 98 Ether represents about 16.45% of my portfolio. That's about $44,000 worth of Ether, or about 98 Ether in Ether, or about 3.97 Bitcoin worth of Ether. Hopefully these two numbers line up right here. Same thing with the Bitcoin. 4.26206 is 4.206 Bitcoin. Bitcoin being equal to Bitcoin. In the case of Ether, that's 103 Ether, $46,000 worth of Bitcoin, 17% of my portfolio. In the end, it'll tell you your totals. If I were to liquidate everything for Bitcoin, it would be about 24 Bitcoin, or about 438 Ether, or about $269,000 in US dollar tether, if I were to liquidate everything to those. But more importantly, I know my allocation. My allocation tells me what my percentage is in relationship to the rest of my portfolio. I can see what my allocation is in this opportunity. Now, what else can I do? Well, one of the things that I can do is I might want to do the strategy that we were talking about before with regards to buying and selling over time, a specific amount, up to or down to a specific amount. Okay, so what you might do is you might say that I want to have this amount of waves. Okay, I want to have 100 waves. So what you would do is what I'm just going to do is I'm going to actually remove the target. Then I'm going to add the target. Waves, ETH, and I'm saying that I want 100 waves. I'm saying that I want to target owning 100 waves. And what this does is this creates a strategy for me that will have me buying. It'll put me into allocation on waves. And what it'll do is it'll buy one position of waves every 1 hour. And it'll use trailing stops. And I can set the trailing stop percents, and it'll do either maker or taker orders in order to get the better price or to get the greedy price on the market. So let's say that I wanted to make one position of waves, 10 waves. Now what it's going to do is it's going to buy 10 waves at a time, 1 hour apart. But it's going to do so using trailing stops. And when it reaches 100 waves of allocation, because right now I have 10.53 waves, it's going to stop. And what this is telling me is that I have 0.15% of my waves, which is 0.14 Ether of waves, which is 0.014 positions at 10 waves per position. That seems wrong. That needs to be multiplied there. That's incorrect. That should be one position. I found a bug. Against a counter allocation of 98 Ether. %of my allocation is in Ether. 0.15% of my allocation is in waves. This is critical. When we are talking about allocation of your portfolio, when we were talking about how you allocate your portfolio for this opportunity, how are you allocating your portfolio for this opportunity? This is your allocation right here against this much ether. This is how you are allocating your portfolio for this opportunity. This is what you are targeting your allocation for. This is what it will do, is it'll sit here and buy you 10 waves every hour on the, for the next, every hour, but it'll trail it up. It'll trail the market down. It'll trail all the way down the market. If the market is coming down, it won't buy. 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 It'll wait for the market to come down. Market will come down and down and down. And then as soon as the market comes up a little bit, that's when it'll buy. So it'll always buy the bottom of the market. And if you set it to maker mode, it'll always do the maker orders. It'll try and, make the maker orders instead of taking the taker orders on the buy side, on the sell side. It'll make a maker order to buy at that low buy price, and it'll wait for somebody to sell into your order to give you the best price available. This is how you optimize a strategy. If you want to do something like trail something down and wait an hour in between and get to 100 while the market is coming down and down and down and down and down, you could just buy it all right here. You could just buy 100 waves and walk away. Or you could set your target to 100 and let it allocate you over the next 10 hours. Over the next 10 hours, 10 waves at a time, 1 hour a piece. But it's probably going to take even longer because you're going to trail on down. So over the next 20 hours, let's say that it trails down for an hour and then it buys and it waits for an hour. Then it trails down for another hour and then it buys and it waits for another hour. So it's taking 20 hours instead of 10 hours. You get down to the bottom of the market, you're all the way allocated to 100 waves. You come back the next day and you run the report again. It's a very simple strategy. It allows you to say, oh, I want to allocate 100 waves for this opportunity. I want to be at 100 waves right now. I want to target 100 waves and get to that allocation as the market comes down or as the market comes up. This is, this is my schedule, okay? If the market comes down to here, how's the plan change? Maybe I go into allocation at 200 waves. What if the market comes down to here? How does the plan change? I change my target to 400 waves. So instead of buying 100 waves, I go to 400. How does the plan change if the market comes all the way down to here? I go to 800. What am I doing? I'm doubling up. As the market comes down, I'm doubling up, okay? Now, I've targeted 800 waves. It's bought me down to 800 waves. I'm at 800 waves. 800 waves remains 800 waves no matter what waves does. Then later, waves shoots up. It goes all the way back up to here. What do I want to do? I want to sell half of my positions. Is that what my plan was? According to the plan that I have made, that we have spent weeks figuring out how to make a plan. I come back the next day and waves has shot up and gone all the way up. Now I'm targeting 400 waves. Assuming that I had 800 waves, I would be in distribution now. It would start selling out my waves for me. Rather than buying waves every hour, it would be selling waves every hour at this new higher price because I came down and I bought and I bought and I doubled down and I doubled down and I cost averaged my position and I doubled down and I got myself a nice low profit line. Got myself a nice low profit line just by being patient and scheduling over time. Scheduling trailing stops, that if the market shoots down, it's doing nothing. But if it shoots down and then comes up a little bit, it buys. And if it shoots down, it's doing nothing. But if it shoots down and comes up a little bit, then it buys. Gets you a better price, better price, better price, better price. Maker orders instead of taker orders. The bid book instead of the ask book. Maybe it comes flying up to here and you end up buying up 100 waves really quick, and then it keeps on going. Then it goes up to here, you were at 100 waves here, well, you're profitable up here. What do? Get rid of your waves. Go into distribution on your waves. Selling out once an hour, 10 waves apiece, until you reach 10 waves and stop. This strategy will do nothing for you if you don't make a plan. This strategy will do nothing that you cannot do yourself. Go make a plan. Plan the trade and trade the plan, because that is what we have been learning. To plan the trade and to trade the plan. The final piece is just to turn this active and let it roll. Maybe I set my trailing stop percentages to 2. Maybe I turn off the trail stops and just buy more aggressively. Whatever it is I do, I get to 10 waves, or I get to 100 waves, or I get to 1,000 waves, or I follow the plan and I remain disciplined to the plan. And then the next day I come back and I modify the plan according to the strategy, according to what it is that I have figured out, according to my technical analysis, according to my fundamental analysis, according to the news, according to the plan for how the plan changes. Plan the trade, trade the plan. Remain disciplined. Come back here and do this every day. It's a lifestyle. Come back here and do this every single day. Come in here. Figure out how much you want to target. Come in here. Target that much. Plan the trade, trade the plan. Walk away. Come back the next day. See what it did. See where you're at. Did you make money, or do you need to buy more? Either way, you've allocated for the opportunity. You're fine. You know exactly how much you have. You know exactly how much you can go. You know exactly how much you have allocated because you have planned that in advance, and you know exactly where you're headed. Even when it comes all the way down to here. You know exactly what setting you will do because you have planned that out. Now, the whole point of automation is that you don't have to sit here and do this in a repetitive fashion. What if you figured out that you really want to double down on this line and on, I don't know, we'll pick some arbitrary line that you figured out from your, Fibonacci projection, and on this line. And you say, okay, what I want to do is I want to come down and I want to buy on, on 15% lower. And I want to triple down, and I want to buy 15% lower than that, and I want to quadruple down. And I want to buy, 20% lower than that, and I want to quadruple down. And 20% lower than that, and I want to quadruple down again. So that was 15 double, 20 quadruple, 20 quadruple, 20 quadruple. That was the plan that we made. Now we could sit here and we could execute that plan by sitting here and modifying these values as the plan changes. Or Or we could use a slightly more sophisticated strategy. A pivot works a lot like a target does because it tries to buy a specific amount, except instead of programming a specific amount and then going in here and changing that amount, it's like we were talking about. What you want to do is you want to program your allocation margin schedule to, what did we say the numbers were? 15, 20, 20, 20% down, and that's our allocation percentage schedule. And then we wanted to do a 2, 4, 4, 4x on that. At 15% down, we wanted to double up. At 20% down, we wanted to quadruple up. At 20% down from there, we wanted to quadruple up. At 20% down from there, we wanted to quadruple up. We're going to start with one position of being 0.01 ether worth of waves. We presently have 14 positions. It's tracking our position. It knows how much we have paid for our waves. It's dollar cost averaging for us. It knows what our current profitability is. It knows that we've come down a little bit from where we've bought. But we're basically right in the middle. As soon as we reach 15% unprofitability, this allocation multiplier schedule will kick into action, and we will buy 10 more waves because that will be doubling up our position. At that time, it will dollar cost average our position and reestablish our new current profit based upon having doubled up our position and moved our profit line down, just like I taught you. Here's our profit line. We bought up here. We're gonna double down, come down here. Now we're here. It does the dollar cost averaging for us. In fact, it does the dollar cost averaging regardless of who does the buying. You or the bot. You go on the exchange and you start buying up waves, it'll just realize that. It'll just know that and take your position and dollar cost average it for you. So even if that's all that you're doing, is you're sitting there and doing all the buying and selling yourself and you're just using the bot to do your dollar cost averaging, well, that saves you a whole lot of Excel work. It's the same thing on the distribution schedule. Here we're going to wait until we're 10% profitable and we're going to sell a quarter of our positions. That would be 2.5 positions roughly. Then we're going to wait until, then we're going to dollar cost average up our profits. We're going to wait until we're 7.5% more profitable beyond that and sell half of our positions. Then we're going to dollar cost average up. Then we're going to do it again, 5% higher and sell off all of our positions. We're going to wait 1 hour between any buying or selling action. And we're going to use trailing stops to do it. Once I have made the plan and I've programmed the plan into here with both my allocation and my distribution, I just set it to true and I walk away. Either the market comes down and it puts me into allocation and does this buying, or the market comes up and it puts me into distribution and it does this selling schedule. At the point at which this happens, this gets knocked off the list and the next one becomes active. And it just executes the plan that you made. It's about the plan. If you don't make the plan and the plan doesn't work, if the plan's not a valid one, if the plan has you allocating too much, if the plan has you tripling up and quadrupling up way too much, it's going to put you into trouble. It's going to make you hurt. You must make this plan. You must make sure that this plan is sane, because this will absolutely do the wrong thing if you tell it to do the wrong thing. This will allocate you way too heavy if you tell it to allocate you way too heavy. If you do not make a plan and then program a plan that is going to make you money, you will not make money. How much you make is dependent upon how you plan. What opportunities you create for yourself, what you buy into, what you sell off of, and then what the market does with it. You can be aggressive, you can be conservative. It's down to your plan. Is your plan 15%? Is your plan 30%? Is your plan for 50%? How much can you make? It depends on what the market does next and how you plan. Finally, there's one last strategy I want to share with you. Let's say that I'm lazy and I bah humbug the whole damn thing about planning, and I just know that this market's going to move. I don't really care about maximizing my opportunity in it. I just want to make my 10% every time it goes up, and then 10% every time it goes down. And I want to stay in that 10% motion no matter what the market is doing, making 10% every time the market changes. Market goes up, down 10%, market goes up 10%. Let's come back to that ATR. 38.4%, right? Something crazy like that. That's the percentage I want to make. That's the percentage I want to target. 36%, whatever it was. Well, let's say I just want to move in a 20% range. And I'm happy that when this thing goes up and up and up and up, I've made my 20% and I reach the top here, and that's all I'm going to make is I've made my 20%. And then the minute it comes back down, I'm going to start buying back 20% cheaper. Then I'm buying down and buying down, and I'm not gaining anything more than the 20% range. But then it goes up another 20%, and I've made another 20% on this opportunity. That's called a straddle, where you're just moving within the dead zone of the market. Seems to be everyone's favorite because it's sort of easy and ridiculously simple. I'll show you how it works. What you do is you just pick your market high and your market low, and that's it. That and the dead zone. What dead zone you want to move in. And so long as the market stays within that market high and that market low and moves within that dead zone, moves above and below that dead zone, so long as you have a dead zone of 10% and it moves 38% and then it comes back down 38%, you're making money all day long. Because it's just allocating you for 50% at your 50% mark and 40% at your 40% mark and 60% at your 60% mark. And it's just not doing any buying or selling within that 20% dead zone. It's your basic sniper strategy. It's called a straddle because we're just straddling the market as it moves up and down. It's also called a market maker. And here's what you do. Is you pick a market and you say, I believe that this market has a low of 5,000 and a high of 20,000. And I want to sell $250 at a time. It does the rest of the work. What it does is it figures out that you have a 61.42% allocation against a 38% allocation. 61% of your allocation is in Bitcoin, 38% of your allocation is in dollars. Here's the highest bid, here's the lowest ask. assuming that I want to target being between 5,000 and 20,000 at a current price of 11,000. That puts my current target at 58.97%. If this is 0% and this is 100%, then this is 50%, and I am presently somewhere around 60% allocation. Because 5,000 to 20,000 we're at 11,000. I'm currently targeting 60% allocation. I currently have 60% allocation. I have a dead zone, a pivot margin of 5% of the target, which is about 10% of the price, which is about $1,000. What that means is that if Bitcoin goes down to $10,500, I'm going to start buying Bitcoin. But if Bitcoin goes up to $11,700, I'm going to start selling Bitcoin. Well, you can see right now, Bitcoin is at $11,100. Therefore, I'm neutral. I'm not doing anything. What I do is I just straddle a lot of these markets. I just sit here and I figure out what the ranges are, the really extreme ranges are in these markets. And I just program in those really extreme ranges, and then these markets move in these extreme ranges. And it makes me money. Look at all these allocations. And then some of them I've capped, almost all of them, except for a few, I've capped at a particular allocation. So what this means is that with my Ohmy's Go, which I'm presently allocated 50%, that means I currently have $2,500 worth of Ohmy's Go. And I'm reserving $2,500 for the opportunity, because I'm currently at 50%. That's what that means. That means that I will never spend at 100% allocation at the bottom of the market. I will never have spent more than $5,000 on my Ohmy's Go opportunity. In this way, I can allocate my opportunity. And you can see what happens is sometimes these opportunities, they get ahead of you. They get ahead of your extreme target. And that's when things like your sell choke kicks in. MER, yeah, BTC. These things get ahead of you. You didn't predict that high. You were predicting a high like here. And now they've made you more money than you even know than you've even planned on making. It's gone above and beyond what I thought I could make with this. But it's saying that it's sell choked because I've told it to hold on to 20% of my opportunities. So as soon as it got under 20%, it stopped selling. And this became my lottery ticket. My lottery ticket, which I can sell out at this really extreme price, because I was going to sell it out back here. Now I can sell it out up here and make even more money. So what happens when the market comes flying back down here? Of course I'm going to be buying again. I'm going to be in allocation again. But right now what I'm going to do is I'm going to resume the damn thing and just let it run. Because what it does is it sits here and tries to sync my wallet and tell me anything that's going on with regards to my strategies. It will sit here and just trade my plan as I have programmed it in. Now, I'm not saying that you have to use this product to plan your trades and trade your plans. If you can get your market intelligence, get your market intelligence. If you can get your business intelligence, get your business intelligence. Make your plans and automate the plan itself. But nothing about this product will make you profitable if you don't plan. And if you know how to plan, you don't need this product. All that this helps you do is make it easy to execute, easy to do the business intelligence, easy to extrapolate the business intelligence, easy to extrapolate the market intelligence that you need, easy to make a plan and then automate that plan. You see, there is no RSI, there's no Bollinger Bands, no EMA, none of that. There's only what I've taught you. There's only what I've taught you, which is planning. If you are not prepared to plan, this product will do you no good. It will take your money. Don't do it. If you know how to plan and make yourself profitable, and you don't need a product to do that, don't spend your money on a product. If you find that having business intelligence is helpful and that you can make more money with automation and business intelligence, do the cost-benefit analysis. Figure out if this is really how you want to spend your money. And for God's sakes, don't spend it on a product that won't give you more money back than it takes from you. Trader Plan has a 2-week free trial when you sign up for it. We do that so people can try out the product and figure out if they can make money with it by making a plan and then automating the plan. But the truth of the matter is that you should be making money prior to using Trader Plan. You should be making money using your plan and executing your plan all on your own. And then once you figured out what that plan is and how you need it automated, and how much money that plan will make you. How much money will that plan make you? That's up to you. You figure out how much money that plan will make you on paper. Because that's how much money Trader Plan will make you. I can't tell you, given your portfolio, how you will make your plan. I can't tell you what markets you will trade. I can't tell you how you will set things. I can't tell you what the market will do after having done that. What I can tell you is that these markets do ridiculous things. And having a plan for profitability, no matter what these markets do, that's the way of the trader. I hope you all found this valuable, and I look forward to our final lesson on Wednesday, in which we'll try and combine everything that we have learned: business intelligence, market intelligence, fundamental analysis, technical analysis, and planning and strategy making, leading into our final class on Friday, our graduation day. Thank you all so much. I look forward to a lively discussion in the dojo.